this be one of the best moments of your life. You're listening to the Business Mirror podcast for a broader look on business with Senior Editor Dennis Estopase.
Good day. Welcome to Business Mondays with BM, a segment of the Business Mirror BM Broader Look podcast that tackles the performance of the Philippine stock market. The Business Mondays with BM podcast is based on the stock market outlook story written by Business Mirror reporter VG Kabuag and comes out every Monday. Today we podcast week 19 of the stock market outlook for May 3 to May 7, 2021. For the text version online, please go to the Business Mirror website and search for Stock Market Outlook. For the print edition, please go to the company section of the Business Mirror newspaper. Let's get on with the story. Last week, share prices continued on a downward trend after the momentum at the start of the week was cut short on Friday as investors decided to cash in on their gains after the government announced the extension of the modified enhanced community quarantine for Metro Manila and nearby provinces. President Duterte announced last April 28 that the National Capital Region, Bulacan, Cavite, Laguna and Rizal will remain under the modified enhanced community quarantine from May 1 to May 14. The benchmark Philippine Stock Exchange Index slid by 70.20 points to close at 6,370.87 points. The main index was mostly up during the start of the week, even rising 112.67 points on Wednesday. However, investors decided to take profits by Friday with the extension of the modified enhanced community quarantine in NCR Plus areas, despite some easing of the measures such as curfew hours and on the number of people to dine in restaurants, among others. The average daily value for the week was still low at 4.92 billion pesos, with foreign investors accounting for 40% of the trade, but remained as net sellers at 2.67 billion pesos. Other sub-indices ended mixed, with the broader all-shares index inching down 4.16 points to close at 3,923.03 points. The financials index rose 10.21 to close at 1,394.23. The industrial index was up 58.58 points to close at 8,679.35. The holding firms index was down 7.24 to close at 6,441.31. The property index declined 30.57 to close at 3,077.94. The services index climbed 7.12 to close at 1,443.11. And the mining and oil index surged 916.52 to close at 9,644.29. Gainers slightly edged losers 111 to 109, and 27 shares were unchanged. The top gainers were Evergotesco Resources and Holdings Incorporated, Philippine National Bank, Philex Mining Corporation, Del Monte Pacific Limited, Manila Mining Corporation B, and Lepanto Consolidated Mining Company B. The top losers, on the other hand, were City and Land Developers Incorporated, Leisure and Resorts World Corporation, Boulevard Holdings Incorporated, D-Zone Copper Silver Mines Incorporated, Nihao Mineral Resources International Incorporated, and Jollyville Holdings Corporation. Share prices may continue on the downward path this week as trading is expected to remain directionless, with COVID-19 infection daily count continuing to hover between 8,000 to more than 9,000 cases. Still, the industrial sector may see improvement in trade as telecom giants and San Miguel Corporation are all expected to release their first quarter figures during the week, broker 2Trade Asia said. The government is also expected to release inflation figures for April, which is expected to be lower due to the imposition of the strictest quarantine measures in the NCR Plus areas. A continued slight break to 4% to 4.5% should telegraph stasis which what markets can hope for the most in these trying times, 2Trade Asia said. Market outcomes do not exist in a vacuum, the broker added. While near-term trading seems exhaustive owing to the lack of conviction of recent price movements, it is important to also look at 6-month to 12-month scenarios, 2Trade Asia said. The broker added that the scenarios include the upcoming general elections next year, mass vaccination, and the easing of quarantine measures in Metro Manila and nearby provinces by May 15. Jafet Luis Tanchanco, Senior Research Analyst at PhilStocks Financials Incorporated, also see a downward bias for the local market this week due to clouded economic recovery prospects that continue to weigh on investor sentiment. In its Asian Development Outlook 2021, the Asian Development Bank downgraded its forecast for Philippine gross domestic product to a floor of 4.5% this year. This is significantly lower than the 6.5% the ADB projected for 2021 last year. In 2022, the economy is forecast to grow 5.5%. Prior to the pandemic, the last time the economy posted a growth of below 6% was in 2011 when gross domestic product growth averaged 3.9%. The projections of the Asian Development Bank are also below the Duterte government's growth expectations. Tanchanco said that overall sentiment towards the market is seen to remain pessimistic as the strength and pace of the economic recovery is challenged by the business closures, worker layoffs, and income losses caused by the reimplementation of the strict quarantine measures. Tanchanco said the Philippine Stock Exchange Index was unable to sustain its ground above its 10-day exponential moving average last week. With this, Tanchanco said the market's 10-day exponential moving average of 6,434.59 as of April 30 is seen to remain as its initial resistance. Tanchanco said the market's immediate support is seen at the 6,370 to 6,400 range. Next to this is the 6,100 level. For the stock picks, Regina Capital and Development Corporation advised to trade the range on the stock of Ayala Corporation as it is having trouble breaching the 770 peso resistance level. According to the broker, Ayala Corporation has been trying to break past this level for 4 straight days last week, but the bullish hammers are starting to weaken. While indicators are still showing a buy sign, momentum is flatlining, Regina Capital said. Volatility is also now significantly low, the broker added. In their opinion, Ayala Corporation doesn't have enough firepower to break out and rally to 780 pesos. Regina Capital said that from a purely technical standpoint, consolidation is more likely to happen. Regina Capital said the stock could trade anywhere between 740 pesos to 775 pesos but is unlikely to go beyond that. The shares of Ayala Corporation closed at 741 pesos apiece on Friday. Meanwhile, Regina Capital advised to sell on rallies on the stock of SM Investments Corporation as its midweek rally did not have enough juice. The stock spiked to a weekly high on Wednesday but wasn't able to sustain this level the next day. Regina Capital said indicators have lost all bias and are supportive of consolidation at these lower levels. Meanwhile, there seems to be decreasing momentum both for buying and selling pressure, Regina Capital said. The broker said to expect further range trading with a slight downward slant. The shares of SM Investments Corporation closed last week at 961 pesos apiece.
Thank you for listening to the Business Mirror podcast. For a broader look on business, follow us on Facebook and Twitter at Business Mirror. Until next time.